I'm pleased to be here at the launch of the banking industry financial literacy campaign. Now, clearly this is a misnomer because we're only talking about the banking industry in the label. But all the people that are at the panel and the people in the room, I think they're much more than just the industry. I particularly liked Remark. Where's Remark? Where is she? Is it Remark? Retruck. Yeah, Retruck. Yes. Ah, yeah, there you are. We've been engaging, we've been working together quite a bit. And I don't think you're a bank, but you have a lot of institutions that you support, you represent. And I pick on you because of the things we've been doing, but everyone else. But it's an important event, and let me appreciate and express my gratitude to KBA for inviting and organizing this launch event. It is true, we in the central bank did make a few, or nudged you a bit as Bankers Association, but you ran with it. And I think that's the way it should be, you know. You didn't need much nudging, you know, and so we are really grateful that it's come to this. I know the campaign targets the public, particularly the youth, to enhance their capacity to make sound and informed financial decisions. The context of the campaign is a very vibrant financial sector, and Kenya's financial ecosystem has transformed significantly in the last decade and a half. From the traditional brick and mortar model, it has evolved to an elaborate anytime, anywhere digital ecosystem, straddling among other services, payments, credit, savings, insurance, capital markets, and pensions. Really, the entire gamut of our financial services. Over the last 8 years, I've been making a point that really our business, for the most part, is democratization of financial services. And that's, I haven't repeated it every single day, but I think it has been at the back of our mind, and the same with you. So democratizing financial services, because I, for instance, the people in this room, you do have enough financial services to go along with your business. But not everybody has that. And I think that's the point of democratization. And in a sense, it's really what the campaign is about, financial literacy. The 2021 FinAccess Household Survey indicated the level of financial access has tripled from 26% in 2006 to 83% in 2021. And commercial banks have also transformed dramatically. In the late 1990s, bankers used to say that there are about 2 million, just think of that, 2 million bankable Kenyans. That's less than 5%. 5%, if you think the population then was like 40 million. Today, there are 73 million mobile money accounts and 64 million deposit accounts in banks. Just think of that. Now, we also know that at that time in the 90s, the minimum current account deposit was like 20K. And very few of the people then would meet that. And that's why they could comfortably say, you don't have more than 2 million people that are bankable that can actually sustain 20K in a current account, any of the other accounts. And the FinAccess survey indicated that 22 million Kenyans were using mobile money accounts, while 10 million Kenyans had bank accounts. Now, before delving further on the question of the day, I want to ask, why are we interested in improving financial literacy of the population? Why? Why is it important to a commercial bank, payment service provider, insurance company, microfinance institution, and even the central bank? I fear, as Simon Sinek argues, too often we get caught up with the what will we do and how will we do it. For instance, this campaign. So we are here, we are going to launch, we are going to do X. CEOs will go back and encourage their COOs to do Y. CEOs will push it down to the, etc. And we ignore the all-important question of why are we doing this? In my view, at the end of the day, it is about lifting the population and giving them powerful tools for their prosperity and security. It is important that we reflect deeply on this. Again, it's the backdrop of a rather checkered history of our banking system. I don't want to remind you our checkered past, the last few years. But anyway, here we are looking forward. So this thing of prosperity and security for our citizens, that's really why we're in this business. It's not about the short-termism or the quarterisms of the returns, etc. It is about lifting our population. So to set the stage of my remarks, it is important to understand the key components of financial inclusion. Broadly, financial inclusion refers to the participation of individuals, households, and businesses in the financial system. The FinAccess survey defines financial inclusion in 4 dimensions: access, usage, quality, and impact or welfare. I'll focus on impact and welfare component, which refers to financial health. The financial health of citizens is indeed where the rubber meets the road in terms of financial inclusion, improving their livelihoods. So while progress in Kenya has been made on the access dimension of financial inclusion, I just mentioned the numbers a moment ago, much more remains to be done on the other 3 dimensions: usage, quality, and impact. The survey reveals that increased usage of banking services, particularly through mobile phones. However, there are still gaps in usage of financial services between male and female, rural and urban, among different age groups and users in different income segments. I want to acknowledge the work that FSD Kenya is doing with the central bank, but also by themselves. It's really interesting, the data that is coming up. Frankly, if I have like an entire week where nothing else is on my schedule, I would really want to spend time understanding the data that is coming through, because there's so much and so much information. So I encourage you to spend a bit of time, even if it is, well, ask your research departments and others to give you a bit of a sense of some of those data. But moving on to quality dimension of financial inclusion, as assessed on the basis of financial literacy and consumer protection, the survey indicated that 45% of respondents relied on friends and family to get financial advice, with formal institutions playing a peripheral role. Some of the challenges cited by respondents include fraud through loss of money, unexpected transaction charges, lack of transparency in the pricing of financial services, and products and systems downtime. And then the 4th dimension, which is impact on livelihood of those using financial services and product by households. The survey employed a framework of financial services constructed from a composite index of 3 main life goals: ability to manage day-to-day needs, ability to cope with shocks, ability to invest in future goals. I note that those are some of the points that Tamara mentioned in the panel. The aim was to determine the outcome of financial inclusion in terms of the resilience of the Kenyan population and its potential for growth. The results of the survey indicated that the financial health of respondents deteriorated to 17% in 2021. Just think of that, deteriorated to to 17% compared to 21% in 2019. Now we know we had COVID during that period, but in some sense it shows you the impact of COVID in this time. This implies that only 17% of respondents could adequately and comfortably meet their day-to-day needs, cope with shocks, and had the ability to invest in future goals like savings for old age. I get a lot of information as the governor of the central bank, as you all know, I can imagine. By the way, when I meet the young people, they are very excited about, oh, your signatures on the banknotes. It's not an issue, you know. Somebody's signature needed to be there. But one of the things that struck me, I got, let's say a clip. Let's just put it, some information. A recording of a fraudster. This is during COVID. Trying to scam a lady. So I have an entire recording of it is a 9-minute conversation. And it's amazing how the fraudster, this is the usual thing, you know, trying to get your pin, this. He's very smooth. But the lady is very sharp and instantly realizes that this is not it. But she plays along for 9 minutes. And the interesting thing, at least from this, in the end she says, listen, I know what you're up to. I know your game. And, you know, I know why you're doing this, so, I mean, and then explains to the man, you know, this is not proper, blah, blah, blah. The man says, look, I have nothing. This is my game. And then the lady eventually says, okay, fine, look, I'll send you some money. How much do you want me to send you? The guy asked for 100 shillings. 100 shillings. I was struck not because, I mean, the clip ends and I don't know what happened. Maybe the lady sent, I mean, she sounded like a very sound lady. But I'm talking about the desperation of 100 shillings. So when we bankers sort of say, well, okay, the ledger fees are what? 50 shillings. Not an issue. For you and me, 50 shillings may be, you know, as we say in the jargon, pesa ni otas, yeah? Julians, how am I doing? Yeah? No, for them, for some people, actually, 100 shillings is a lot of money. And during COVID, it was a lot of money. So I want to make it clear that it's not just the numbers that need to surprise us, and you need to appreciate where our people are. I'm talking of your customers and the others, your potential customers along this journey. And really, that person clearly couldn't do his day-to-day needs, whatever they were. I mean, and I don't think he was getting the money so that he can go and buy drugs or any of these things. Yeah? But I don't know. The point is, it was only 100 shillings that he asked for in the end. Let's move on. Globally, the World Bank Global Findex database revealed that in 2021, 76% of our adults had an account at a bank or regulated institution, such as a credit union, microfinance institution, or mobile money service provider. Account ownership around the world increased by 50% in the 10-year span in 2011 to 2021, from 51% of adults to 76% of adults. Notwithstanding this significant increase in global access to financial services, financial health remains a concern. In particular, only 55% of adults in developing economies could access extra funds within 30 days without much difficulty. Friends and family were the first line source of extra funds for 30% of adults in developing economies. But nearly half of those said the money would be hard to get. Furthermore, women and the poor were less likely than men and richer individuals to successfully raise extra funds and more likely to rely on friends and family as their go-to source. Further, about 50% of adults in developing economies were very worried, in particular, about covering health expenses in the event of a major illness or accident. And 36% said health care costs were their biggest worry. In sub-Saharan Africa, worry over school fees was more common than in other regions. 54% of adults worry about them, and for 29%, it is their biggest worry. Additionally, according to the Global Findex, about two-thirds of unbanked adults say that if they opened an account, excluding mobile money, at a financial institution, they could not use it without help. That's interesting. So you open an account, but you need help to run your account, to use it. Something doesn't sound right here. 1/3 of mobile money account holders in sub-Saharan Africa say that they could not use their mobile money account without help from a family member or an agent. Women are 5% points more likely than men to need help using their mobile money accounts. Inexperienced account owners who must ask a family member or banking agent for help using an account may be most vulnerable to financial abuse. I think the bankers in the room understand exactly what I'm referring to. This is a problem that we see every single day when you think about fraud and the sources of fraud, the weaknesses, etc. Also, 1 in 5 adults in developing economies who receive a wage payment into an account paid unexpected fees on the transaction. Together, these issues point to the fact that less experienced financial customers may be more vulnerable to fraud. Thus, investments are needed in numeracy and financial literacy skills, product designs that take into account customer usage patterns and capabilities, as well as strong consumer safeguards to ensure that customers benefit from financial access and to build public trust in the financial system. But I want to stress something else, which is it's important that we appreciate that our customers actually have very strong skills in a particular area. The way I think of it is, think of when you are in school. There may have been somebody who was not much into mathematics. But when it came to music, that person was off the charts. When it came to art, when it came to soccer, when it came to history, when it came to science. So you may be so focused on mathematics or whatever, language, and you realize that actually their skills are not there. But elsewhere, the skills are phenomenal. You know, I think about this quite often. Why? You think about the mama mboga. Yeah? So she has, let's say, tomatoes in the morning. Well, not in the morning. She comes in at maybe 11 o'clock. That's when I see through my window. I can observe a lot. And I see, the mama mbogas. Occasionally I do see Kajo chasing them. But that's another story. So she has these piles of tomatoes, right? I haven't seen them in the last few months, but anyway, I'm sure they are there. She has these piles of tomatoes, and it is a particular price. Let's say there are four of them, tomatoes, and it's a particular price. I don't remember the prices now, and these prices are always changing, meaning from season to season. So it's some amount. And then, and she's calling these prices, and then at around 2 o'clock, she'll change the price. She's calculated in her mind what the new price is. Then at about 4 o'clock, she'll change it again. And by 5, it's Beya Gioni, yeah? And she has almost completed her stock. And by the way, she's moved from the 4, now it's 3, and the price, if you just are there with a clipboard just putting together all this information. It would be great, but I cannot handle that. You understand what I'm saying? I don't think the people in the room actually have the ability to sort of calculate the correct price that will clear these tomatoes and at every single moment. She is able to do all that in her head. So when we talk to them about financial literacy, you should understand that this is a lady who is off the charts in a particular sort of calculation. Yeah? And so when it comes to our side or the other things that we are trying to tell them or her, we need to first appreciate that there are things that she's very, very, very good at. Anyway, but the question is what went wrong? All these problems I mentioned before. Why so many obvious problems? And does it matter to our institutions? As I mentioned at the beginning of my remarks, it must matter to every one of us and every one of our institutions. What perhaps happens is that we end up as free riders. You know that story about free riders. So I'm a particular commercial bank. It doesn't matter to me. I'm not going to put any expenditures in financial literacy because KBA and everyone else and whoever, they'll do the job. I'm just a free rider. Our institution will free ride. I think that's a big problem. And that's why we are in this room. And that's why it was important for all of us to be here together. Or maybe we are not practitioners of what I'll call the broken window theory. Now, you could ask Julian what that is, but do you want to tell my lessons again? We'll find out. This is the broken window theory. It is more like taking care. If you have a building, right, and a window or two are broken, repair them right away. Don't wait. Or maybe to put it differently, think of the park and people drop taka, right? If you are cleaning the taka away, people will find it difficult to drop the taka. I mean, just go to Kigali. Yeah, the people there are just like us. But somehow, because they've cleaned up the place, it's now much more difficult for you from Kenya to drop your taka there, I think you understand what I'm saying. Nobody is behind you to arrest you, but it is just, so it's that thing of taking care of things right away. So the same applies to financial literacy. That person, that mama mboga, that client, do you actually follow them right away? Or, think about if you are running a restaurant and the customer comes, yeah, and so you give them the menu and say, okay, you figure it out yourself. Clearly, that's not what happens. You go to the waiter or waitress goes to the customer and understands what is it that they want, and then explains to them the menu, explains adapting it to the various needs, right, of the relevant customer. And that's, I think, the lesson for us. If you're going to do that, the broken window approach or the broken window theory, I think it is something that will help us. It really is this thing of the small things add up. They add up to the big thing that we are trying to achieve. So, I now need to finish. I think I've spoken too much on this. I'll outline 3 broad themes to reflect on as we collectively work to strengthen the financial health of Kenyans. In doing this, I'll draw substantially from the Kenya Banking Sector Charter, the so-called banking charter, issued to the banking sector by the Central Bank of Kenya in 2019. The charter sought to operationalize the vision of a banking sector that works for and with Kenyans. It is anchored on 4 principles: customer centricity, risk-based credit pricing, transparency and disclosures, and ethical banking. And this morning I'll focus on customer centricity and transparency and disclosures. So, first, on customer centricity. This is key in addressing the financial health of our citizens. Financial services and products should take into account the day-to-day needs of customers supporting their resilience and achievement of life goals. Tailored saving products and insurance products, particularly covering medical care, come into mind. This is a big lesson for all of us. Further, pension products that cater for individuals in the informal sector and post-retirement medical scheme are also pertinent. My challenge to the financial institutions represented here is how well do you understand the financial health needs of your customers? Do you have products and services that meet their needs at the different stages of their life cycle? So if you are running that restaurant, do you really know what your potential customers need? I mean, and what are their constraints? Meaning maybe they want foods served within 20 minutes. And that's a huge constraint. Lunch should come to the table within 20 minutes. So you have to work your kitchen and everyone else to make sure that that is the thing. So understanding the customer at the various stages of their life cycle is essential. So the needs of different customer segments vary given the income segment and stage of life, as the panelists have actually explained quite well. The risk appetite of high net worth customers will indeed differ from a middle class family with children about to join university. A broad brushstroke approach to product development in an environment like this is redundant, and the challenge is to customize products and services accordingly. Second is transparency and disclosure. Customers are now faced with a myriad of financial services and products that they may not understand. And I think it was quite well elaborated in the context of the panel discussion. The allure of anytime and anywhere financial services is increasingly leading customers to partaking the services and products without adequate knowledge. And the whole business here of the digital credit providers, I mean, that whole history comes to mind. Now, it's true, they've made a step and we are regulating them. And most of them, we've actually licensed them. There's still a few, let's just call them laggards that are out there causing a lot of pain. But I think that whole experience is one worth bearing in mind. This has led to challenges including over-indebtedness and addiction to betting and gaming. In Kenya, where I just talked about this, the digital credit providers, no need to underscore that. Third, a holistic and collective approach to financial health is imperative. All players, including regulators, financial service providers, customers, must come to the table to strengthen the financial health of our population. I'm therefore pleased to note the participation in today's launch, not just of commercial banks, but also of insurance company, microfinance banks, SACCOs, payment service providers, etc. We are all serving the same customers who require a variety of products for their financial well-being and ultimately for their lives and livelihood. As I draw to a close, the campaign we are launching today should not just be about financial literacy, it should be about enhancing the financial health of Kenyans. The words of Queen Maxima of Netherlands, a global proponent of financial health, are apt, and I quote, "It is important to remember that financial inclusion on its own is not enough. Rather, it is a means to an end. It remains critical to be deliberate in targeting positive development outcomes that strengthen the resilience of people and small businesses and contribute to their improved financial health," end quote. So, colleagues, We have ways to go, but I'm confident we'll get there. We must. And in the words of a famous proverb, if you want to go far, go together. Thank you very much for your attention.